Good morning, everyone. My name is Wei Du. I'll be your moderator for the next actually, I've just been told, the next 40 minutes. And I'm very excited to be sitting here with very exciting four technology companies from all across Asia. They're very different in nature and in their development stage. And I have a feeling we're going to have a fantastic discussion today. Let me just introduce our panelists. To my right is Mr. David Kim. He's the chairman of Animoca, and you guys are a Hong Kong-based app developer, mostly in mobile games. David, we were just talking, probably has the longest history in the industry, and I mean that in a good way. He was previously the CEO of search engine Locals, and he also sat on the board of Korea's Daewoo for 7 years. And speaking of Daewoo and Kakao, we have Mr. John Park, Chief Global Strategy Officer at Daewoo and Kakao. Now, the firm is the biggest listed internet company in South Korea, and as of yesterday, has a market cap of $7 billion. To my left is Mr. Magnus Grimeland, a co-founder of Zalora, online fashion retailer, also known to many sitting here as the reason you really should be getting rid of your credit card.
Yes.
Now, I understand Zalora is a rocket internet company, but it's based here in Singapore, operates in 9 different markets, I should say, from Hong Kong to Australia. And reportedly, the company has raised $240 million over 3 years, but it never disclosed a market cap. Maybe this is the time to do it.
Perhaps.
You want to talk a bit more about that?
No, unfortunately, we can't share the market cap now. It's a sensitive time in the market, so but hopefully within a few years we will share a market cap.
Okay, fantastic. And to Magnus's left is Mr. Dhruv Shringi. He's the co-founder and CEO of Yatra Online, which is India's second largest online travel booking company.
That's right.
Did I get that right?
Yes.
And correct me if I'm wrong. Your last funding round was last year, $23 million from investors, including our very own Temasek.
That's right.
And the market cap is about $400 million?
Not commenting on the market cap, but the previous part was correct.
Okay. All right. The brief I was given today is to get these guys to talk about their success. So my first question, how did you guys get started? And did you think you would be here today?
Should I start? Okay. Kakao was, let me talk about Kakao and Daewoo because it was a merger last year between the two companies. Kakao was established about 5 years ago, and more as in the form of an accident. So when iPhone started coming into Korea, the idea was to try and see what we can do to facilitate the usage of these new smartphones, which looked cool and interesting. And so there were 3 services that were launched that were all linked to some form of communications. And out of the 3, the messenger service really picked up, and the other 2 didn't quite pick up as much. Those other 2 remain as services, but they're not the core. So Kakao Talk was launched officially 4 or 5 years ago, and then it really ramped up in usage. And today, pretty much dominate the entire Korean market. Over 95%, and I think that's the single most used app in Korea over mobile. Just to talk about Daewoo was also a very significant internet portal established a lot earlier, and it was PC-based, and they had search and content over the PC, like a Yahoo or services such as that. And in Korea, it was number 2. And over the course of time, it was starting to face a lot of competition from number 1 player. And last year, the idea was to merge the 2 entities and combine $1 billion market cap listed company, which was Daewoo at the time, and about $2 billion Kakao Talk messenger service based upon the last funding, to merge and to form a $10 billion market cap company. Whereas Kakao has about 600 people, today it has about 3,500 development resource. It has both presence online and on mobile. internet and mobile. And I think where Kakao is now trying to spearhead into is the rest of the world, because it only focused on Korea and has dominant position in Korea, but much less presence in other parts of the world. Out of 50 million population, the MAU is about 40 million. And globally, we do have about 50 million in MAU today.
Great, David? This is your second incarnation in the technology industry.
Well, actually, me personally, this is many, many incarnations, actually. I was started back in the mid-90s, as we were discussing outside. Actually, did I know that I was going to be here? Not until very last night. Actually, in the program, it was supposed to be another fellow, Yatsu, my co-founder and partner. He had a family emergency, so I came in as a replacement, so I did not know that I was going to be here. But
we're very thankful you stepped in.
Yes. Well, largely now, though, the company, right, that I'm here to represent, Animoca Brands, is actually an app developer, games, which, of course, there are a billion of us around, but there's only a few that actually has the ubiquitous and global presence that we do. But the overall industry that is right now, did we know that it was going to be here? I don't think anybody did. Even Apple, when it created the system, didn't know that it was going to be quite this ubiquitous when it first opened. I doubt. Maybe Mr. Jobs had grander ambitions than we knew, but certainly it wasn't supposed to be this big and this disruptive. So by and large, to answer your question directly, I don't think anybody knew that it was going to be like this.
Which markets are your biggest markets, or that actually is not a concept for you guys? Because
it's actually, people would assume that mobile is a very global platform, and it is. I mean, certainly Facebook, Google, you can find them everywhere except China, of course. But generally, it is perceived as a global, but it still operates very, very country by country. Each country, not just the language barrier, but really the cultural barriers are there. You don't see it as much, but there are only a few games or apps that are truly global in scale. But the rate in which it's grown in the last couple of, just as an example, 2014 was about 25 billion online revenue, mobile game revenues, 25 billion. A year before that was almost literally half that, 12.5 billion in 2013, doubled in 2014. I mean, we're talking billions. That's bigger than Americans, NFL, NBA, Major League Baseball all put together. It's much bigger than that, and it's a market that didn't exist 5 years ago. The App Store did exist, but this ecosystem did not exist 5 years ago, as it is today. And of that 25 billion in 2014, by the way, half of that, so all of 2013 global revenues are now represented just in Asia, 12.5 billion in 2014. Asia is now half of the global revenue. So we are in a very, very exciting market and exciting geography for those of us that are based here.
all right, another company intrinsically Pan-Asian, Magnus.
Yeah, so Zalora, I think the premises is pretty basic, right? I mean, everyone is wearing clothes. At least I can see everyone wearing clothes in the audience now. Everyone wears clothes. Everyone, I believe, will do shopping online more and more. You see it in several markets where you're starting to reach 20s, into the 20s in terms of online shopping penetration. If you look in Southeast Asia, when we started in a lot of our markets, it was less than 0.5% online e-commerce penetration. So it's bound to be a very, very exciting industry. So that's where we wanted to come in and build, a Pan-Asian fashion company. What we also realized after a while is, we're also very close to one of the most exciting sourcing hubs in the world for clothing and for designers. So we also started building our own label, which is the Zalora label. So on top of the e-commerce arm, where we focused a lot on the technology, and now moving onto the mobile platform and all the development there's, on the tech side, we now also have, I think, a very strong and exciting team that comes from the fashion industry that designs our own label, which is now 30–40% of what we sell is our own label. So really also focusing a lot on building the fashion brand. And this, I think, is quite exciting, this you know, the interface between the tech side, because we need to be very advanced on that, and the operations and everything we do across all these countries, which, you know, are quite different. We operate in Vietnam, Philippines, Malaysia, Hong Kong, Singapore, Indonesia, Malaysia, and Brunei, Australia, and New Zealand. So it's quite a different audience. But what we see is it's also quite exciting to build a fashion label that you see sell in all of these countries. So we have our own big label called Zalora label, and we have something borrowed, 2401, all different styles. We're launching a Korean collection. We have also, I think, a very exciting ethnic connection, which is Muslim wear, which is very, very big in some of the countries we're in. So it's very exciting to be in this place where we have a lot of people who think only fashion, design, latest trends, what are the big influencers, and on the other side we have our techies who's really developing the most exciting new features in the app, and, you know, a new way to do things online. And it's turned out to be a very, very right place to be at the right time, both in terms of the fashion trends there and this becoming globalized. A lot of the Asian trends, especially Korean influence, actually now in Southeast Asia is becoming very big. It's been a very exciting journey in the last 3 years.
And bringing together fashion models and programmers. Who wouldn't want to work for you?
Yeah. So a lot of different profiles.
Dhruv, online travel booking in India
Sure.
wasn't necessarily a new idea. Why did you get into it?
I think when we started, it was new, and Yatra started a bit by chance. I think we are one of those cliched kind of startup stories. I used to work in London with a company called eBookers in the online travel space, and this was mid-2000s. We got acquired by Sendint, and one of the first things that happened post the acquisition was I got fired. I used to be the CEO of eBookers. And then, as is tradition in London, we all went out for leaving drinks. And in that moment of Dutch courage, I decided that, you know, I want to do something on my own. And as luck would have it, in the morning when we sobered down, 3-4 of the guys in my team decided that, hey, this still made sense. And it took us about 6-7 months to raise capital, and in the middle of 2006, we came back to India. At that point in time, India was pretty much still in its nascency from an internet development point of view, and also internet penetration. So the first few years were a lot more challenging. We were dependent on the broadband networks and the ISPs to acquire new customers for us. But suddenly, in the last 2.5 years, things have exploded. We now have, thanks to the advent of $100 or sub-$100 smartphones, you've got almost 300 million people who are connected onto internet devices. So the ecosystem has suddenly started developing, and it's developing at a crazy pace right now. It wasn't really, you know, path-breaking when you look at it from today's perspective, but at that point in time, to come into a market like India was very challenging. And we've realized that in India, the reason e-commerce is taking up, and it's a bit crude to that extent, is because the physical infrastructure sucks. From a customer's point of view, the alternative to buying online is so painful, right? You have to go out, terrible traffic, bad roads, parking, and all those other hassles, that you would do whatever it takes to either go into a cyber cafe, or now, thanks to mobile devices, you would rather buy it on your own. And I think that, to a great extent, is what's driving the e-commerce. From a penetration standpoint, we are still pretty much in low single digits from most industries' point of view. So there is tremendous amount of upside which will go, but it's just a crazy environment right now.
Before I go any further in this discussion, I do need to remind you, if you have any questions, please send them in. We'll leave about 5 to 10 minutes to take your questions towards the end. Now, one thing if you look at some of the biggest technology companies in the world, barring Samsung in South Korea, they're almost always American or Chinese. But you guys made a very specific point of not entering the Chinese market and the US market. Was that only a matter of entry barrier, or it is a strategy in its own right?
I think, you know, we wanted to focus on market. I mean, it's a competition thing, right? In the US, there's very heavy competition on e-commerce. Same in China right now. I don't think we're at all afraid of entering markets which are tough, right? I mean, I think all of the Southeast Asian markets have their innate challenges as well. So it's more about the competition and the environment that was there. So we wanted to focus on a market where, first of all, we believed we were bringing a service that they didn't have yet, And second of all, we also want to focus on markets where that we find a common thread. So we feel that in Southeast Asia, and now we're also in the Pacific, we have common thread on a lot of things we do, both in terms of styles, but also the way we operate. So that's what we wanted to be there. If you look at Rocket Internet, they're of course in all markets. They're also now entering the US, right? So they have some interesting setups there in Silicon Valley right now. So it's not so much about not focusing on the US and China because it's not exciting markets, but for the industry that we've been in now, I just think that the white space and the opportunity has been much, much bigger outside, given the competition and how early people started with, especially Alibaba and Amazon and a lot of the other also vertically integrated e-commerce companies you have in China and the US. While in Southeast Asia now, of course, it's that you talked about earlier. It's basically, if I look at the fashion companies in a country like Indonesia, for example, 3 years ago, there was 1 or 2 small local competitors. And then there was some general e-commerce companies. This is only 3 years ago, no? So when we did our big, the Cyber Monday, when you have the big sales from all the e-commerce companies, the first time we did it 12-12-12, in Indonesia, there was 6 partners. 6 partners doing the big e-commerce day. How many do you think we did the last year now in 2014?
Is that a question? Serious question? 360?
Almost. It's around 100 partners. So it's more than 90 new e-commerce companies starting in the last 2-3 years. It's just if you came in at the time we came in, it really made sense. There wasn't any e-commerce company.
So saturation happened very, very fast. Are you still seeing white spaces somewhere else?
Yeah, for sure, because still e-commerce penetration in Indonesia is probably, it varies who you ask, but somewhere between 0.5% to 1% penetration. And it's 260 million people there. Economy is growing very stably, and you see the same in a lot of the other Southeast Asian markets. Really, the only place where you have significant penetrations is in Singapore and Hong Kong.
Right.
And it's the same with, the chat apps industry is growing a little bit faster, and the gaming is a bit higher penetration. But if you look at most of e-commerce tech space, there's still a lot of white space there. So I don't think it's that much about competition now in most of our markets. It's about actually. So I love working with other e-commerce companies because it's about converting a customer to becoming an online customer. And when they become an online customer, then they will trade in between the various e-commerce platforms, which is a very different game than you probably have now in China and the US, right? Where everyone has this, or a lot of people have started to have this online experience. So it's more competing for the same customer, but we are very much cooperating about converting the customer onto the online platform. And then sometimes in the future, then competition will become more real.
You guys started in several markets from the get-go, which is different from Daewoo and Kakao that till this day is still almost a pure Korean play. Is there something in the company's gene that's just difficult to transfer to other markets?
So over the last year and a half, we actually tried various different things on globalization. When we found that Kakao Talk was very successful in Korea, we wanted to replicate that model in other countries. And our thesis was, let's try those countries that are nearby, which most likely will have closer cultural similarities than those far away, like the US or Europe. So we started off with many of Southeast Asian countries. And there were times when we would spend $50 to $60 million just on marketing dollars to let people know about Kakao Talk. It picked up as we predicted, but then it didn't stay. It just dropped drastically afterwards, creating miserable failure experience for us. And on global experience, this is one of the struggles we're having. And our thinking is transitioned or evolved over time. And that is, we think in Southeast Asia, which we thought we would be successful, there were many issues with relation to connections and speed. And it turned out people like other apps that are lighter just because they're 1 second faster in response time to our very hardcore messenger service. And so things like that we didn't predict. that we're experiencing. So we've entirely changed our approach on globalization, which is we would go find and identify potential winners and hungry entrepreneurs, and we will back them by investing and possibly sharing our share structure so that we could become one. And that's our new approach to globalization. In terms of region, we still have focus on those countries nearby, like within Asia, because we still think there are closer cultural similarities than those farther away. And people look a little more similar. And however, we are going a little farther in terms of finding good models, business models, because our new approach is in identifying winners in each of the markets. And so we created a subsidiary company this year, which effectively we're investing $100 million in cash, plus we're utilizing some of our equity. So more than $100 million a year for local and global expansion, both in terms of regional scope and in terms of service and product offerings.
So Kakao, of course, is a company that has the resources to modify products for different markets. How does a smaller company like Animoca do that?
We do it very smartly because we don't have the bank account that Kakao has. And each market, especially in gaming, actually I'm sure it's the same for Magnus too, where each market really is different. Anybody who knows Asia here would acknowledge that Japan, Korea, unless you're Japanese and Korean, are very difficult to penetrate. China, almost impossible. Southeast Asia, it's a little more welcoming, but each market is uniquely different. And you have to approach each market very, very separately. Language-wise, cultural-wise, as I said earlier, is extremely different. And even if it's the same language, we will take the same game and we will actually localize it because the local tastes are just a little bit varied. But this is anybody who's actually been in the space a while would probably know. I mean, just look at the history, right? There aren't that many companies that have really done this multi-country. Really, there are very, very few exceptions. And Kakao is a great example in which you have such dominance, but it's very difficult to export that, even to the, of course, Korea is, of course, in a tough geography. I mean, we had Yoshi and a bunch of Israel folks. That's a tough neighborhood. Korea, that's a tough neighborhood. Sitting between Japan and China for 5,000 years, not easy. So there, you can't even, you've got Line and you've got WeChat, Tencent in China and in Japan. So it's difficult to expand. So Southeast Asia is a little bit more malleable as a market. But down here, we have WhatsApp in various countries that are very dominant. And so it's difficult to actually just export the model as it was. And with each market, and I'm not going to generalize and say, well, in Indonesia you do it this way, in Malaysia you do it this way. There is no general.
Okay, but you need a critical mass in that market for it to make sense for you.
Yes.
Which markets do you prioritize?
Well, right now, we've actually just moved with the market. We have over 200 million downloads as of today, 250 million downloads as of today. And until last year, actually, we were still very US dominated because much of the mobile ecosystem was still very Silicon Valley based. Just naturally, not just because we were here, but just naturally the market moved such that all the revenues and resources and downloads are happening here more often. So we do, of course, if you've got hundreds of millions of users, that's enough of a critical mass as John would tell you. That's enough users that you can actually promote your games or apps just within your own ecosphere. And there aren't that many companies that can do that. And a lot of the newer guys that are coming into the market are going to have a very difficult barrier that many users won't see. But now, for you to actually rank high enough to be relevant in the App Store or Google Play, you're having to spend hundreds of thousands of dollars a week to rank in the top 20, to actually be relevant, or be fortunate enough to be featured by Google or Apple. So now it's extremely difficult, but if you have that critical mass, it becomes much more easy. And in Japan, Korea, China, fortunately we have that. And Southeast Asia, mostly we covered. But again, it's not for any other reason than this is just where all the action is. This is where all the big money's spent. And with the exception of a few games like Clash of Clans that everybody seems to play, or Candy Crush, a lot of the cool gameplays are coming out of Asia, Korea in particular, although our Chinese and Japanese brethren wouldn't acknowledge that. A lot of the cool game designs come out of Korea. And is exported, and this is, but everywhere it goes, it does need to be localized.
Okay, all right. One market you guys haven't talked that much about is India.
Right.
Is that kind of a thing on its own? You guys have done a very good job of fending off the international competitors.
Sure.
How have you been able to do that?
Yeah, I think India it's perceived as an English-speaking market and hence easier to penetrate. But the ground realities of India tend to be quite different. When you were talking about language and cultural barriers, you go 200, 300 kilometers in India and you start discovering different cultures and cultural barriers. So India is not one country. I think geographically and politically it's one, but within it there are multiple countries and multiple ethnicities, cultural differences. So you have to tailor make your product for each one of those differently. And I think one of the biggest mistakes that a lot of multinational companies have done is tried to assume that just because everyone or a large number of people speak English, it's one market. And I think that's where it's fallen apart. So you have to start thinking about building your products in line with each of the cultural regions and see how the product that you're servicing is relevant for that region. The reason we've remained very true to India as opposed to going out to other markets is we feel that the market opportunity is large enough in the area that we are servicing, right? Penetration levels are again low single digits. From an upside point of view, there is tremendous amount of upside to be had by going deeper into the market as opposed to going shallower across multiple markets. So that's been our philosophy, try and look at each region of India differently. And again, from a population point of view, from a purchasing power point of view, they are larger than most of the other regional markets that we encounter.
That's great news that even one country is not necessarily one block. But I know when people, from an outsider point of view, when they look at Asia, they look at China, Japan, Korea, India, and they tend to also look at Southeast Asia as one single block. Has that been true in your experience, Magnus?
Not at all. I think some things are the same, right? So if you look at the technology aspect, the core of our technology is the same. If you look at if you want paid marketing, like bidding on a Google advertisement is very much the same across any markets, but then there is a big layer on top of it. If you don't get it right, you will not succeed. So one of the things that's become very important for us is to have a local organization everywhere we are. So we have a local marketing team, also operations. A lot of the Southeast Asian markets are very hard to drop ship into. So we have experience that if you want to deliver things consistently and at a high service level, we need local operations. So we have a strong local operations team. Also, buying styles are different, right? We're in the fashion game. So yes, there are trends, like the Korean trend going everywhere now over Southeast Asia. We have the big, of course, international brands that are well known across a lot of the markets. But then there are these huge, really powerful local brands that are now also expanding to other parts of Southeast Asia that are very important for us to also bring online and provide to our customers. And without a local presence, you will not capture this. And then just doing operations in Indonesia, like just to take it as an example, is very different from doing operations in Singapore, where you can, I could probably deliver most of the packages myself in Singapore. If I got the address, I could find it. But then in Indonesia, first you need to do address verification because people will write addresses differently. Then you need to ensure you have a payment method. So we do cash on delivery in most of our markets. Then you have to ensure that you get through the traffic, as you mentioned earlier. Right. So you need to plan around that. And there's all of these local challenges that you need to understand very innately, because if you come in and you try to do everything like you would do it somewhere else, it just won't work, which for us didn't work in the beginning. We of course looked at what every other e-commerce company has done. But then it was only when we came on the ground and understood, got really strong local resources, adapted to the local environment, that we could build a customer experience which was at the level that we wanted, and managed to succeed in those countries, right? But I think everyone does a bit of trial and error there in the beginning. But then when you get it right, then it's amazing.
All right. I'm going to have to move on to your questions very quickly, but I just have one last question. I'd really appreciate short answers. There's a lot of excitement in the industry right now over the past couple of years. Some people say it's euphoria. Everybody's been talking about rising interest rates, especially in the US. David, this is, like we said, it's your as many incarnations. In your experience, where are we in terms of frothiness? How much longer can this party go on?
Oh, well, the party, if we're talking about the public market, I don't have that answer for you. And if anybody says that they have the answer, then they're probably selling you something. Nobody can predict the public side of it. As far as the technology boom, are we at the tail end of it? Absolutely not. The innovation that happens, and we're talking about, I'm from the west coast of the US, no offense to the east coast of the US, although we're both Korean, ironically. The west coast, there's always exciting innovations happening. People don't hear about it, and everybody pays attention as the news cycle goes. But there's always very, very exciting things happening, and I would say that the mobile technology, the internet before it, this is all going to just come, it's going to ebb and flow, but this is going to be an increasing scale, bigger market, and a lot of new technologies coming out constantly. It's almost impossible to keep up with all the new technologies and different ways to actually monetize the technology today. So I would say public market frothy, maybe, but as far as the business, absolutely not. I think Magnus is a great example of a company that just takes a very old model, tinkered just a little bit, and all of a sudden, boom, you have a company that is market capped at a few $100 million, we'll assume.
We're going to come back to that and ask him about listing plans a little bit later. But John, what's your feeling?
My feeling is maybe 2 to 3 years is how much we have left before there is some form of correction. I experienced early 2000, and I was a very active member then. Back then, if you remember, we all focused on subscriber numbers, no revenues. The difference this time is revenues do matter, and people are starting to care about operating income along the way. So if what people start calling bubble is probably going to be a little bit safer or softer. But as I meet companies for investment, as I look at valuations of all the companies for prospective investment and possible acquisitions, and together with ours, it's very heavy, and it's approaching a very high level. And so if you see the pattern, it usually lasts so many years before it sees major/minor correction, and I see that as 2-3 years.
But again, I think that's actually still talking about the public market. What I'm saying is actually just, as far as the technology is concerned, totally different.
Okay, but what happens in a public market? Does that matter to you? Are you looking at a 2-3 year window to get out?
So no, not at all. I mean, we're in there for the long game, and I think that we're just at the start of it. As everyone has talked about, I think that there's still hundreds of millions of people without the internet in Southeast Asia. No, there's more than 100 million people without the internet in Southeast Asia. So you have this innate growth in just the market, organic growth. Like even if you just do average, you should be able to grow in this market, right? So that's the first driver. The second driver, I think, is that technology is still innately stupid, right? I mean, it's so much. There's so much. I mean, computers can become so much smarter than they currently are. Like even if you ask the Google now, so you have the Series. If you log on a computer, things crashes all the time. There's so much more innovation you can do within the computer space to make it much more human-friendly. And we're just at the very, very beginning of technology. And the third for me is the whole mobile trend, right? I think we're just starting on the. It's not too long ago people started having smartphones in their hands, right? We're just at the very beginning of this trend as well. And so I think we're at the right place at the right time. Yes, market might go down for a few years, but this is definitely an industry that will continue to grow like crazy, I think, for
And you guys are not in no rush to list?
No, not at all. I mean, we're in no rush at all. I think we're in e-commerce in Southeast Asia. This will just continue to grow for decades.
Is that the same case for you, Dhruv?
Yeah, I think what has changed in the Indian environment of late is the access to capital. Right, 2013 it was very hard to raise capital. 14 it started changing, and 2015 in the last 6 months, actually last quarter of last year and this year, there are at least 5 companies who've raised rounds which are more than $150 million. So the quantum that you would go and raise in a public market is today easily available in a private market. And I think that's a great advantage that companies like ours have, that you don't have to worry about getting into a quarter-to-quarter kind of an environment, and you can raise similar quantums of money in a private environment and build a business more fundamentally from a more long-run point of view. And to the point which is being made on the industry, I think from an industry point of view, valuations and an industry, if you were to set them aside for a minute, on the industry fundamental side, from a mobile point of view, you're at just the beginning of the life cycle, right? For us, hotel bookings, I'll give you one example. In January 2014, about 30 basis points of our hotel bookings were happening on mobile devices. In December 2014, 40% of our bookings were happening on mobile devices. So in a period of 12 months, it went from 30 basis points to 40%. So I think the mobile is entirely changing the game. And if you can raise capital in the private market, which allows you to be insulated from the quarterly earnings pressure, then I think it's much better to do that to build a business from a much more long-term sustainable point of view.
Okay, fantastic. All right, now I'm going to take the questions from the audience. Does anyone want to just stand up and ask a question yourself? All right, good thing I have this then. The first question is for John. Kakao, similar apps to WhatsApp, Snapchat, and Uber. Do you guys do a similar app to Uber?
Not Messenger, but we launched Kakao Taxi, which is similar to Uber.
Okay, so the question is, how is it different to those existing players, and what made it so big in South Korea?
What made us so big in South Korea? Part of success is focusing on the users, make it as convenient and easy to use for users as possible. That's number one. And then timing was quite right. Now, having said all this, in Korea, SMS at the time was paid service. So you had to pay per SMS messaging service. And so Kakao Talk made a lot of sense because it was free. The second feature that was different was it wasn't just conversational. You could actually send pictures and data over the messenger service, which made it a very unique proposition. And with that, we just had immediate take by the public on our use. Now, having said that, soon thereafter, the three telecom companies, there are 3 mobile carriers and landline carriers. They all aligned to go against Kakao Talk. So they created another messenger service, which is free in concept and where you can actually send data packets as well. But somehow they never picked up. So I think that part, it was more user interface and ease of use that made the difference. Second, if I have time, you talked about Uber and Kakao Taxi. Kakao Taxi was launched within the last month. And then in the first day of launch, we had about 7,000 users use it. And today, if you hop on to Korea, most people are using Kakao Taxi. And I use that as well. And the taxi drivers would say, this is awesome. This is the best thing in the world. And so kind of a reaction you would get about Uber in San Francisco or in the US. And part of the strategy was what we talked about in global. Uber is no longer present. They have some minor presence, but not in a major way in Korea, although they launched a while back. And I think our strategy was we should work with taxis because of the strong labor union. And if you don't work with them and try to do something independently, it was going to be hard to survive for political reasons. And that worked out exactly. Our thesis worked out. And so that's why on global, I think it's very important to figure out what the local situation is and to try to figure out the reactions of different constituents. And that seems to make a big impact on the success of the service.
Okay, great. All right, next question is actually not addressed to any specific panelist, but I'm going to start with Magnus, because you were talking about how social apps are becoming increasingly important, even for e-commerce companies in Southeast Asia. The question is, how do you ascertain if a particular social-driven app is suitable or has huge potential in this market?
So I think for us, I mean, it's hard to assess in the beginning, but we try to work with all the chat apps. I think really chat apps and social apps are becoming, and social, we all know that social media for a while has been a platform, but chat apps is now really also becoming a platform as well, right? So we work closely with Kakao Talk in Indonesia, which is the market where we already have the strongest presence. We work with Line, we work with Viber. We try to work with all the chat apps that are out there, because we really believe that this will be a future platform for e-commerce as well. And it's very important for us to be early in that space. To find out who of them will be successful, I think it's very hard to say, right? You gave the example earlier of all these powerful companies that were running the telco world in Korea coming in and starting an app, and they failed, but Kakao Talk succeeded. And then you have, it's also quite interesting in Southeast Asia how you have, you know, Kakao Talk being strong somewhere, you have Line being strong somewhere, you have Viber being strong in some other places, and then you have WhatsApp taking off in some places, but then you go to other places, you can't WhatsApp anyone. So it's really hard to say. I think it's, if you come in and you have strong local presence, you do the adaptation that you talked about earlier, and you get a bit of traction, then you can take off quickly, but at the same time, someone can come in and try to do the exact same thing, and then they won't succeed. So it's hard to say who will succeed in this space, but for sure it will be a platform that I think everyone who works within this space in the audience should take very seriously. For us, we see that whenever we do blasts on the chat platforms, or we work with them, and we get access to the millions of users they have, our sales picks up like crazy. So it's definitely a very, very exciting platform. Finding what would be successful or not, very difficult. So we try to work with everyone.
All right. That's actually all we have time for. My thanks to the four gentlemen on stage, and my thanks to everybody in the audience.